John, we come in bang on estimations for the overall CPI up 0.5% on the month, which takes the year-over-year rate and the headline to 5.4%, actually leaves it at 5.4%. There was a thought it might drop to 5.3%. On the core, we get a move of 0.3%, and that is lower than forecast. 0.4 was the forecast, and last month it was a 0.9 rise. So as I mentioned, the idea of the rate of change is what is going to matter here, and we get a core rate of 4.3%. That's down from 4.5% in June. So overall, better news. Let's take a quick look at some of the components here. Food up 0.7, and that is something that people have been keeping an eye on. Food away from home, one of those categories that had been going up rather rapidly, up 0.8%, which is more than it was in June, 0.7, and so food at home 4.6%. Energy up 23.8% on a year-over-year basis. Gasoline on the month up 2.4%. We've seen a rollover in prices in terms of oil, so we should see in August gasoline prices go down. Used cars and trucks. Now, here's a big change. Used cars and trucks up only 0.2%. In June, they were up 10.5%. So we were expecting a rollover there, and we got it. Apparel up 0.2%. It was up. Apparel's unchanged, rather. It was up 0.7 the month before. So at this point, it looks like we are seeing a lot of the temporary effects fade from the CPI that the Fed had been expecting to change. And I know David Kelly's looking at owner's equivalent rent up 0.3. That's the same as the prior month. We have been waiting to see how quickly owner's equivalent rent, the idea of home prices, changes in the CPI after rental prices have gone up. And one last one, John, 2.7% for airfares. They were up 7% in June. So a lot of the things that had been pushing up prices no longer doing so.
Fading a bit. It's deceleration. Deceleration is what we trade on right now. Let me whip through the price action for you. Your equity market on the S&P 500 turning positive, up 7 on the S&P. We advanced by 0.15%. The Nasdaq catching a bit, up 28 on the Nasdaq 100. Futures there, positive 0.2%. Let me quietly and slowly go through what's happening in the bond market. Yields were higher by a couple of basis points on 10s. That move sticks. We're still at 136, 137. Move at the front end, Tom. Two-year yields come in about a half a basis point. It is not a big move in any way, shape or form. It is 3 minutes after the print, but it's important just in terms of the direction that yield didn't go higher off the back of a hotter than expected CPI print.
I agree, John.
I would say in some way, Tom, just an early take, but for the Federal Reserve, they'll be a little bit more comfortable with this one this morning.
People don't have the luxury of Michael McKee to dive into the data, and when they do dive in, John, I really wonder what we're going to see, say, in a 30-year bond. It hasn't backed up yet, to be direct, 2.01%. Michael McKee, what do you see on travel, transportation, airplanes? That's the other doom and gloom thing people are talking about, and pros are saying, wait.
Well, we do see a big decline in airline fares, down 0.1% after a 2.7% rise the month before.
So that's
and
moving in the right
before.
direction, true.
So we're moving in the right direction with airfares. And if you look at airfares, they had dropped precipitously when the pandemic started, and airfares are now basically back to where they were in February of 2020.
Okay.
So while they went up a lot, the overall price level did not rise.
You're saying we want to quiz at 10 a.m. with 3-month moving averages. Michael McKee, thank you so much, out of economics.